Tonight, something big just happened on Wall Street, and it's not the kind of headline investors ever want to see. In a single trading session, the U.S. stock market didn't just stumble, it plunged. The Dow Jones Industrial Average dropped by more than 1,500 points. The Nasdaq sank nearly 6%. The S&P 500 followed with a sharp decline of its own. This wasn't routine volatility. This was a shockwave, and the reason behind it is as significant as the drop itself. The Trump administration has unveiled a sweeping new tariff policy, one that reaches across nearly every major trading partner of the United States. At the center of this plan is a baseline 10% tariff on imports, with even steeper penalties targeting dozens of countries labeled as unfair trade actors. On top of that, a 25% tariff on foreign-made cars has already taken effect. This is not a small adjustment. This is a fundamental shift in how the United States engages with the global economy. Markets, it turns out, were not ready for it. Investors reacted immediately and decisively. The sell-off began as details of the tariffs became clear, and it accelerated as fears spread about what these measures could mean in the weeks and months ahead. Because tariffs don't operate in a vacuum, they ripple outward. Higher import costs can mean higher prices for businesses. Higher prices for businesses can mean higher prices for consumers. And when consumers start pulling back, the entire economic engine begins to slow. That's the concern tonight, not just a bad day on Wall Street, but the possibility of something deeper. And yet, even as markets stumbled, the message from the White House struck a very different tone. President Donald Trump dismissed the losses as temporary, telling reporters that the markets are going to boom, the economy is going to boom, and that other countries are eager to strike deals with the United States. It is a message of confidence, but it is also a message that stands in stark contrast to what we're seeing in real time. Because beyond the stock market, there are warning signs flashing across the broader economy. Oil prices are climbing, adding pressure at the gas pump. Global markets are reacting with uncertainty. And analysts are increasingly raising the possibility of a recession if trade tensions escalate further. This is where things become more complicated. The administration's strategy is built on the idea that tariffs can be used as leverage, that by imposing costs on imports, the United States can force other countries to renegotiate trade agreements and ultimately bring manufacturing back home. It's a bold strategy, but it's also a risky one. Critics argue that tariffs, in practice, often function as taxes on domestic consumers and businesses. Supporters argue they are necessary to correct long-standing imbalances in global trade. Tonight, that debate is no longer theoretical. It is playing out in real time with real consequences. And there's another layer to this story, one that could have even broader implications. Rising geopolitical tensions, particularly involving Iran, are adding to market anxiety. Concerns about instability in the Middle East are pushing oil prices higher, which in turn feeds into inflation concerns back home. That creates a difficult situation for policymakers, especially the Federal Reserve, which must balance inflation risks against slowing economic growth. In other words, multiple pressure points are converging at once: trade policy, energy markets, global stability, investor confidence. All of it tonight moving in the same direction toward uncertainty. And that uncertainty is what markets fear most. Because when investors lose confidence, they move quickly. They pull money out of stocks. They shift towards safer assets. And that movement itself can accelerate the downturn, creating a cycle that becomes harder to control. That's part of what we saw today. Billions, even trillions of dollars in market value erased in hours. Retirement accounts taking a hit. Businesses facing new questions about costs and demand. Consumers bracing for the possibility of higher prices. This is no longer just about policy. It's about impact. And politically, the stakes are rising just as fast. Economic performance has long been one of the most powerful factors shaping voter sentiment. When markets are strong and prices are stable, confidence tends to follow. But when volatility spikes and uncertainty grows, that confidence can erode quickly. We are now entering a moment where economic decisions are colliding directly with political consequences. So tonight, the key question isn't just what happened, it's what happens next. Will these tariffs lead to new negotiations and a rebalanced global trade system? Or will they trigger retaliation, escalation, and a broader economic slowdown? Will markets stabilize as investors adjust? Or is this the beginning of a deeper correction? At this hour, we don't yet have those answers. But what we do know is this: the global economy just absorbed a major shock. Markets have sent a clear signal of concern, and the path forward is anything but certain. We will continue to follow this story closely. because what happens next could shape not just the markets but the economic future for millions of people. Stay with us.